Good afternoon, everybody. I have that Dow Jones. Yes, that Dow Jones. Look at when we came back over here, we made a double bottom. That's the trend line, my friends. We rally up to the top, but we look at the last 5 day period, which is this week. Very narrow range at resistance. They gap it with headlines, then they dropped it like a rock. And today, that bottom, you can see the trend line. It goes right here where the breakdown was that major support level right across here. Now we hit the 50-day simple moving average. We can go up to the 100-day moving average at 31,427. But let me just tell everybody on this particular index with this bear market rally is we are in phase one overbought territory. We have three different phases. Right now, we're going to have to deal with this trend line at that 100-day moving average. That would be it right there. First, though, where the breakdown was at the bottom of that candle, we are right there right now on that horizontal trend line, my friends, and you can see that. Now, the Dow was up 749 points, and that took that stochastic up to 98.5. That is overbought territory at this resistance, right at that 50-day, but this is where the real big breakdown was. So when we draw a trend line, we know that we're right there. This is the trend line. Look at it. This is the breakdown. That's the upper end. Then the Dow, with this big Dow bear market rally leading the way, and we have major earnings next week. And we're rallying up in this particular index going into a major volatility week ahead. If we were to gap down in any news event, like the Fed, the interest rates going higher, the yield was way up there. And now we have that major hurdle. My friends, 5 day mathematical trading ranges never lie. You got this big up bar in the rally that started it. That is what we call this big Friday bar right there. I drew two X's there. We have a 2-to-1 with bigger upside volume. And this is the time of year, October. This is when you're supposed to go up. But you have all of this hawkish Fed talk, and then the bond yield, the 10-year note, and that it pulled back. It was only down 13 cents, but it made an all-time high. So we're at 2007 highs. The king dollar, let's do a dollar chart. The reason why stocks like to rally is because we made a big drop in the US dollar index. When the dollar goes down, that is much more powerful for equities to go higher. And the perfect setup is they couldn't take out that dollar high here. That's at resistance. And now it's at a major support level. Let's go back to the Dow. If that dollar goes higher, and the Dow will sell down. So the volatility is going to be bigger. We got 2 to big 1. These are narrow range pullbacks on headlines. Sign up today. We will go through all of the mathematical trading ranges and do trader plans. We call it execution plans for next week's volatility.